We've all been told by people that credit cards can be evil, that it's dead and it only can lead you to destruction of your wealth. The sad news is that this can actually be true if you don't use them correctly. But the great news is that there are solutions to this problem. I like to think about credit cards as a tool that actually can help you develop wealth and give you a great deal of benefits that can help you gain points, cashback, free travel, and many others, but it will all depend on how you use them. In this video, I'm going to tell you about the 6 most common mistakes that beginners do when it comes to credit cards. Before I got started into the credit card world, I had to do a great deal of research in order to understand how these tools work, because it can truly be a dangerous place if you're not well informed. And once I started learning how the credit card companies made their money and how I can use this tool to work on my favor instead of working against me, it truly opened my eyes to a whole new world of benefits and opportunities that the credit cards can give you if you use them correctly. And because of this, I will highlight what are the most common mistakes that people do when it comes to credit cards. And if you're doing one of this, please stop now, correct these issues, and then you will be able to start taking advantage of the credit cards. Mistake number 1 is applying to too many credit cards. It is very easy to fall into this trap because of all the benefits that you see on the different credit cards, also all the welcome bonuses that some of them are very great, and it can be very tempting for you to watch a great welcome bonus and start wanting to apply to that credit card. However, it is very important to highlight that every time that you apply for a credit card, the credit card issuers perform a hard inquiry in which involves the credit card company will check your credit report as part of the application process. These hard inquiries already impacts your credit score on the category called new credit, which is about 10% of your total credit scores, and this leads to 2 things. If the lender sees that you apply to too many credit cards, it can signal them as if you are a very risky customer, because usually there's no reason for you to be applying to too many credits or loans at the same time. So having multiple hard inquiries on your credit report might show that you're taking too much debt and that you're a risky customer. And reducing your credit score can heavily affect your ability to get great interest when it comes to car loans or mortgages. So the key takeaway from here is to take it very slow when it comes to applying to credit card. At least wait a period of 6 months between applications, so on your credit report doesn't appear that you're applying into a lot of credit cards or taking too much debt and you don't appear to be a risky customer. And also, it's very important to take into consideration when applying to credit cards that some of them has an annual fee. So if you apply to too many credit cards that have an annual fee, you won't only hurt your credit score, but also you'll have an annual payment that you'll have to do that will also hurt your ability to achieve financial freedom. The best route in this case, it will be to start applying to no annual fee credit cards first. Personally, I would recommend something in the Chase world, like the Chase Freedom Flex or the Chase Freedom Unlimited, before gradually upgrading to annual fee credit cards that are more advanced, more complex to understand, but if used correctly, can help you gain even more rewards in the future. Now, moving on to the mistake number 2, this will be maxing out your credit card. This is a substantial mistake also for 2 reasons. 1, this can greatly hurt your credit score as well, because as you see in the FICO score chart, the category of amount owed constitutes 30% of your credit score, and maxing out this category will greatly hurt your overall score. When banks or credit lenders see that you're constantly maxing out your credit card, they will take this as if you're overextending and that you're potentially at a higher risk of defaulting on your debt. And this is the main reason why it affects your credit score, and the reason why is the second highest category on your FICO score. And when your credit is maxed out, your monthly payment will become very substantial and very hard to pay. If you cannot afford to pay for the full balance at the end of the month, you will be charged interest, in which credit card interests are probably one of the highest in the world, and they range between 15% to 25%, sometimes even more. And this can trap you in a cycle of debt that can be really difficult to get out of. So don't put yourself in this position at first. and avoid this at all costs. This will greatly impact your ability to either get future loan or getting a good interest on a future loan. Either way, if you realize just by not avoiding the first two mistakes, you're already having a very costly issue that can lead to the destruction of your wealth. Now, I'm going to talk about the mistake number 3, which is not treating your credit card like cash or like a debit card. I keep repeating this on almost every video that I make, but this is probably one of the biggest mistakes that people do and one of the most important. You need to treat your credit card like cash, because whenever you're spending someone else's money, it is very easy to overspend. But at the end of the day, you will have to pay this amount back. And if you don't pay the amount in full every month, you will be charged the interest that I mentioned previously. And if you're not careful about this, you might be spending more on interest than on the actual debt that you have to pay. This is basically where mistake number 3 and mistake number 2 can tie together, because both of them can lead to the habit of overspending, which is something that you have to avoid at all costs. And I know many people that have this mindset in where they use their credit card to pay for a certain product that they don't need, and they always think that, okay, I don't have the money right now, but then I'll pay it with the credit card. After I get paid, I'll pay this credit card debt. And what ends up happening is that they constantly think that they have the opportunity to pay this debt, and when they don't realize, they reach the end of the deadline and they end up being charged this huge interest, and this is where things start to become really bad for them. And sadly, it's not one or two, but I do know a lot of people that go through this issue. This for sure is one of the most critical aspects to be aware of when it comes to credit cards. Remember, treat them as debit cards, only spend what you have in your bank account, and avoid overspending. Mistake number 4 will be ignoring the introductory period of the 0% APR credit cards. This is a great benefit to have. Sometimes you have an emergency where you have to pay a great deal of money that you might not have at that specific time, and the 0% APR gives you the flexibility for you to be able to pay down that debt slowly, and which is not a bad idea. However, something that happens really often and that can really hurt you is that people take on too much debt and they trust too much this 0% APR credit card that sometimes they don't realize when the deadline of this introductory benefit is going to end, that when they do end, they still have a great balance to pay, and now they get charged that high interest that I've been talking about in the video. And this is when it becomes an issue. This is why it's very important for you to remain vigilant about the 0% APR. Make sure that you pay down your debt before this period ends. I will even recommend you to take notes, ask the bank, make an Excel sheet counting the months, anything that you have to do to remind yourself when it's the deadline and when do you have to pay your credit cards in full. Banks really benefit from this high interest that they receive when people don't pay their credit card on time. And as you can see, credit cards can be a very tempting tool that can lead people to overspend in a lot of things for things that they don't need. And this is how they force you basically to go through this debt cycle where you do have to pay the high interest and you lose a lot of money. Basically, having self-control and understanding this is the key to avoid making big mistakes when it comes to credit card. Mistake number 5 is closing a no annual fee credit card. I think this is one of the most common mistakes, and even though people might think that this doesn't hurt you, it actually does. On your FICO score chart, you see that there's one category called length of your credit history, which constitutes 15% of your credit categories. And this takes into consideration how long specific accounts that you have been opened. A lot of people make the mistake of closing their first credit card because they say that they are not gonna need it anymore, and that might be true. However, most likely this is a credit card that has the most credit history with you, since most of the people have used it for a very long time. And when you close down that account, you basically lose all the credit history tied to that specific credit card or that specific account. My recommendation for you would be have this credit card open, try to use it at least once or twice a year so they don't close it, so you can have the credit history of this account alive. Personally, the first credit card that I opened was with BB&T, now called Truist, and I rarely use this credit card. I don't even have it in my wallet, but I do take it out with me sometimes to do really small expenses, like maybe paying for dinner or something along the line, so I make sure that this credit card remains open and my credit score remains high. And lastly, mistake number 6 will be choosing the wrong credit card for your current lifestyle. You have no idea how many people choose the wrong credit card for their current lifestyle. And what I mean by this, and the most common mistake that I've seen, it's people that basically want to flex and they apply to a top-tier credit card such as the American Express Platinum, which is currently the most expensive credit card that you can apply with an effective annual fee of $695, and people don't take advantage of all the benefits, and they end up losing a lot of money and basically not taking advantage at all of the benefits of this credit card. Basically gives you 1 point for any purchase that you do outside of traveling, but you see people that almost never travel and they use this credit card for grocery expenses, for dining out, in which you have way better and cheaper options that can give you even more benefits for these expenses, like the American Express Gold, which gives you 4 points on dining out and 4 points on groceries, and these people end up losing a lot of value because of this. So whenever you want to apply for a new credit card, it's very important that you understand your own spending habits, and from this, do research in which credit cards basically fit better with your current lifestyle, so you can maximize the value of your own expenses back to your credit card and use it for benefits such as cashback, free traveling, free hotel stays, and many others. Think about how can you make something out of your grocery shopping, out of your dining out, out of your gas expenses. And once you figure this out and you make your own research, you'll have the chance to unlock the full power of credit cards. After all the mistakes that I've talked about throughout the video, you really need to be careful about your credit score, because this can help you to save a lot of money in the future. When it comes to getting a loan for paying for a car or getting a mortgage to buy a house, just by having a great credit score, you can get the best interest rate, and this can help you save a great deal of money in the long run. Also, when it comes to applying to new credit cards, having a low credit score may prevent you from getting a good credit card that you might want to have in the future. So these are really important aspects to take into consideration. But what I think that can hurt you the most is falling into the trap of overspending, maxing out your credit card, and then end up paying 20 or sometimes 30% of interest based on the total debt that you have. A lot of people fall into a debt cycle that it's really hard to get out, but it is very easy to avoid in the first place. You only need to be informed about how you can use the credit cards the most efficient way, how can you get the best credit cards for your own lifestyle, and basically understand how can you unlock the full power of these tools. If you use them correctly and strategically, you can actually profit from this and help you gain a great deal of value out of it. If you like my videos, please subscribe to my channel, hit the thumbs up, and drop any comments or questions that you might have. I really hope to see you soon.